Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 8th of September. I'm Daniel Lam, your host for the podcast. The non-farm payroll last Friday is nearly confirming a rate cut from the Fed later this month, which we've been expecting. Now the market debate is moving to whether it will be a 25 basis point or a 50 basis point rate cut. The US labor market report for August was softer than expected. Headline non-farm payroll rose just 22,000 versus the 75,000 consensus. Average weekly hours and year-over-year hourly earnings were also below consensus, and the unemployment rate rose to 4.3%. That broke above its range of the last 15 months to a level last seen during the post-COVID recovery in 2021. The 3-month average slowed to 29,000, down from 231,000 at the start of the year. Job gains were concentrated in education and health services, while cyclical sectors contracted. Now, if you recall a podcast from last week, we spoke about how any August NFP number below 40,000 with modest downward revisions to the previous months would move markets towards a 50 basis point cut. It looks like we are seeing such a case here. Now, cutting rate by 50 basis points next week would allow the Fed to try to silence those that believe the FOMC has been too conservative and may be falling behind the curve in supporting the economy. But on the other hand, of course, they are taking a risk on any resurgence for inflation if they end up cutting rates too fast. Now, on that front, the US CPI figure on the coming Thursday would be a key number to watch. So over these 1.5 weeks till the upcoming FOMC, we're expecting risky assets to be trading in this tug of war between investors who believe in a 25 basis point rate cut versus those who see the possibility of a 50 basis point cut. Now, US equities illustrated this very well. So the S&P 500 initially rose when the NFP report came out, but then equities start selling off intraday and recover somewhat by the end of the day. Still, the failure to sustain the break upwards suggests that we are facing headwinds in US equities. Thus, investors should be prepared for some volatility ahead in these few weeks, as September is seasonally a relatively shaky month for equities. We can see S&P 500 testing key support levels at 6,200 and 5,900. The DXY dropped post NFP, but it has been recovering as we're doing this podcast. It looks to be trading around the 98 level. Gold is benefiting from these market uncertainties, and it will be the subject of our next podcast. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.